Okay. I have students that will lie to me as their teacher. And I'm fully capable of accepting the fact that there are going to be people out there that are going to lie and say my shit doesn't work because they aren't doing it correctly. That's why I said, bring your receipts. If you know that you have tried, show me that you have tried. Show me what you have been journaling. And showing me 5 fucking pages of scribbling is not journaling. That's somebody hurrying up trying to put something together to make it look like it. Because on face value, people's attention spans are very short. They're going to say, oh yeah, I saw he journaled. What did he fucking journal? What did she journal? What did they journal? What were they looking for? What were they measuring? What were they trying to do a case study on? What model are they trying to employ? Are they changing shit all the time when they go into the marketplace? Or are they looking for one particular thing? So to keep the whole bias issue out of the equation, to simplify it, just trading intraday volatility. That means whatever the market's going to do from the highest high and the lowest low that it will form that day, which you don't even need to know that. I have tools that'll do that. I've proven it publicly that I can fucking tell you what they are. And you watch me trade them. You don't have anybody else out there in any fucking trading community that's ever proven that. Just me. Now, intraday volatility, that means you're going to be looking for an hourly or basically 60-minute swing high or swing low that is likely to move to. It's in close proximity to it. It's been going up for the last couple hours or so. And it's just getting real close to an obvious 60-minute high. If it's not doing that, go down to a 15-minute time frame. Look for a swing high that it might be gravitating to. If it's gravitating towards that 15-minute high, and real important, here's the filter, folks. Okay, this is the fucking part that you're not going to do. And when you fucking lose, you're going to swear up and down that it fucking fails. On a 1 or 5 minute chart, if you're bullish, it must show a swing low taken and then reject and go higher. Whatever time frame, whether it be the 1 minute or 5 minute, whatever time frame that swing low is breached, it goes below it. It only needs to go by 1 tick. Doesn't need to close below it either. It just needs to go below it. That time frame that has the swing low, it must have a candle close up after it takes that low. Once it does that, you immediately drop down to a 30-second chart. But I can't have a 30-second chart. Then you can't fucking trade this model. Just apply it to a higher time frame. Instead of a 30-second, use the 1 minute and use the 15-minute and 1 hour chart. Everything's scalable. But I'm giving you something that you can test a lot. There's lots of examples doing this throughout the week, from the beginning of trading on Sunday to Friday's close. There's many instances of you going in and going to be able to back test this and have no bias. And you're going to have losing trades. It's okay. But you have to have whatever that time frame is, the 1 minute or the 5 minute, there has to be a stop run. One of the first primary principles I taught when I stepped out on baby pips is the real move will not happen. The dynamic price runs where there's magnitude and delivery and speed, that will happen after a pool of liquidity is engaged. That means if the market's bullish, if you think it's going to go higher, I think it's going to draw up to some level, whether it be a high, a relative equal high, inefficiency above market price, whatever that is up there, that you're framing as a reason for it to want to go up, it's far more likely to get up there with conviction and speed if there has been a short-term run on liquidity that's below the marketplace in the form of stops or sell-side liquidity. Because the market's going to go down to allow traders to buy those stops. What traders? Smart money. The algorithm is cowtailing to them. It's called handshaking. The market reprices to levels to allow handshaking to occur. That's the real term. That's exactly what's going on. And when those orders are being provided to the participants that are on the sideline, you're not seeing their fucking orders on the DOM, the depth of market. It's not dome, by the way. DOM. When that is showing those numbers and stuff, their orders are not sitting there. Smart money's orders are not sitting there. They're not fucking sitting there, folks. That's why I'm laughing at you when you're fucking using it and you're asking me, show me your order book, show me your level 2 data. That's fucking bullshit. That's all bullshit. It's spoofing. Their orders are immediately piped in. Immediately. They're not sitting around waiting for you can read them. If they have their orders the size of their fucking orders and the volume of their fucking orders, if they were sitting out there where you could see them, you could really read sentiment then. They're never going to fucking let you do that. Why the fuck is it so hard for you not to see this? Because people on CNBC and people that are allowed to talk on CNBC that have no fucking real clout on Twitter. I've been on CNBC, so therefore my opinion matters. Get the fuck out of here. When it drops down to take the sell side when you're bullish, whatever that time frame is that has the swing low that it pierces and goes below, as soon as it does that, you have to wait for one candle to be up close. Once it does that, then and only then do you drop down to the 30-second chart and you wait for a fair value gap to form and then you buy it. The best one is the first, but you can take continuous buys on a 30-second every time it creates a fair value gap or trades to a down close candle. You treat it like a bullish order block. And you can turn that single one contract model over time. If you submit to 3 months of doing it, you build discipline and you aim for that liquidity. But here's the thing. You might be just like my son and you're scared. You can't hold a trade. Okay. Best case scenario, put a limit order at 15. 15 handles, there it is. So you're risking 12 to make 15. That's not bad. It's a little bit better than 1. But most of the time, my son has 10, 11, maybe 11 and a half, sometimes 12 handles. And he moves his limit order around if he ever uses it. Sometimes he's honest with me. He says, Dad, I don't have a limit order because I'm afraid if I put it at 10 and it goes to 15, I'll be upset about that. So he's still not disciplined in that regard yet. He's growing, but this model allows him that growth. It protects him from losing a lot because he can only trade with one contract. He can only take one trade per day. He can only do one thing. And it keeps him in a tight little bubble where he can only, like a petri dish, okay? I've taken him and I've put him inside of a petri dish and said, okay, this is all you can fucking do. You can bloom and grow all you want, but you're never getting out of that fucking petri dish until I tell you new parameters. And so far, his growth has been perfect. It's showing him incremental gains. It's realistic gains. I think, honestly, if everybody out there, even people that hate me, those results are consistent, aren't they not? They are. They're not perfect. He's got an 80% strike rate in terms of his trades. At 18 years old, that's fucking phenomenal. That's fucking phenomenal. I don't give a fuck where you came from. That's good shit. But see, you are equating it to some of the things that I've done, or you see other people do, and they may not even be true. Don't look at the amount of money as the reason to say something is good or bad. Because what if you were making $250 a day? That's going to mean something to you, isn't it? It's going to mean a whole hell of a lot to you. Whatever you're aiming for, as far as the draw on liquidity, over time, you'll learn to hold it a little bit more. See, he has to submit to this for a few more weeks before he's allowed to go for 20 handles. Because he's not going to have, right now, he doesn't have it yet. He doesn't have the wherewithal to be able to hold the trade for 20 handles because he's nervous. He's afraid. He's expecting one of those weird, crazy, big down close candles or wicks that come against him real quick. He's expecting it. That's what he's having in his mind. He thinks they're going to jump out like a boogeyman. And you're laughing and smiling thinking, that's exactly how I feel every time I'm in a trade. And you know how you beat that? You know how you beat that boogeyman? You just constantly engage and you desensitize yourself to it. And you see, how many times does it really manifest itself? It might happen once a month. If you're following rules If you're bullish and a stop hunt just takes place on sell stops, chances are they just engaged that liquidity and smart money just went in and added more. Then the algorithm reprices higher. Not because they bought it, not because of the buying pressure. The handshaking element that the algorithm does, it delivers to a pool of liquidity. It doesn't know how many orders are there. It can't know how many orders are there because it's always changing. Orders are coming in and being pulled, spoofed, putting in, put them out. Like that's not a factor when it was coded. It's just where will they be? At what time are we interested in going there? That's how the algorithm's coded. So when that handshaking event takes place and allows the liquidity to be engaged, whether it be purging or engineering new liquidity, that element brings with it a context of what price action should do next. So if you know the likelihood of those stops above relative equal highs, below relative equal lows, or above a single high or below a single low, you're framing where the liquidity is that the algorithm will refer to. And then you sit there and you wait. Which one is it gravitating to? Whatever one it gravitates to or starts moving towards closest, you can use this model. And you can take 10 handles. It happens every day. But you want 50 handles. You want 100 handles. You want to make $10,000 in your combine challenge. You want to do 15 contracts over leveraged and stress the entire fucking time that you're in the trade, worrying about what happens if it doesn't work out. But man, if it really does work out, I made the maximum amount of money. You want to live your life as a trader like that? Where everything is a fucking do or die? That's not what professionals do. They go in there and they do something that's absolutely fucking boring, using a leverage amount that is realistic, it's sane. That means it's not insane. And they are respecting the risk because they are not perfect. They're not perfect. Cameron has lost a few, I don't know how many exact, I got to get the numbers off of him. The idea of a perfect winning record, he'll lose that eventually. By having 100% strike rate on the day with an 80% plus win rate, even though that the average profit is small because of the context of the stats, he's averaging $250 to $240 a day. Do you earn that at your job? Do you earn that in your trading right now? Do you feel confident that on Monday that you're going to be able to make $200+ absolutely assured that it's going to happen? Do you have that feeling in your fiber, in your being as a trader, as a student, as someone that's learning how to do this? Are you that confident that you know absolutely that you know you can walk in there next week, Monday, Tuesday, Wednesday, Thursday, and Friday, walk out of there with $200+ and confident that what you're doing is absolutely sound logic? It's not gambling. Do you have that right now? He's learning that. He's at that point where he's discovering it. And watching him walk around, he walked differently. He walked differently. He had his shoulders back. He felt good about himself. And for a while, he didn't look that way. And before he started doing this stuff and trading, and before he lost his girlfriend, he always had that bounce in his step. He's athletic. He's bigger than I am. He's fucking like a linebacker. He's huge. But I watched him dip down. His self-esteem went down a little bit. He didn't have that fire in him because he thought he was going to walk out here and conquer the world with combines and shit. And he discovered that there's a whole lot of things that he brought to it, and it's not easy. It takes time to figure yourself out. And you don't need a whole lot of things and bells and whistles to work with to do an experiment to discover where your character flaws are. And you have to do that in your humble beginnings. Quietly, without the interference of other people's opinions and judgments. Telling you you're wasting your time, or you're going to fail, or what you're doing is fake, or you're learning from a fraud, or all that stuff is meant to distract you. That's how the enemy works. That's exactly what he does. and you listen to it and you ignore all the evidence around you where it does work and people are making real money. And there's no way of escaping the fact that what Cameron's doing is being proven by another entity apart from me. Oh, do a combine ICT if you can trade. I don't need to do that. I don't need to do that. Look at what my students are doing. And look at my young buck, my 18-year-old that thought he knew everything in the beginning. And now he's discovering, wow, this is a lot easier than I thought. That's exactly the right mindset. And then he has his shoulders pulled back now. He feels good about himself. Not arrogance. It wasn't arrogance. He's had arrogance. And I told you before, if this boy learns what I know and wants to do what he says he wants to do, or what he was wanting to do, he is going to be a menace. He's going to have a whole lot of fucking haters. He might be drawing too much negative energy on himself. And maybe this is a way that God said, hey, in his development, it'll change him. Change him for the better. Not trying to be like that, like in that aspect. But moving forward, I'm challenging you. I'm challenging you to do 90 days of the same thing. One contract, one mini with a demo. Looking for it with the model idea that I just gave you here. It's stripped down, folks. There's nothing that you can deduct from it anymore. It's simple. It's the simplest as there is. There's nothing else simpler than that. If you can watch the market in the morning, you look for it there. If you can't watch it in the morning, watch it in the afternoon. It's occurring all day long. Multiple times. He's discovering that he has more than one setup per session. Dozens of setups per day. I said that plurally. There's a lot of them there. And that's what these algorithms do all day long. They pipe their orders in. Boom, 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 boom. And they're sliding themselves in between everybody else's orders and buying and selling. And that volume comes in. There it is. Every single one of you, if you do this, number one, you're going to build a lot of understanding about who you are. You're going to discover that you're not as patient as you thought you were. You're not going to be surprised when you see how hard it is to stick to this one idea. It's very hard. But you will not be able to stick to anything else, risking more money when that emotional stimuli and courage is diminished when you take a loss when you're trading with the largest leverage. You feel bad. You feel regret, remorseful, but not so much that you keep from doing it again, because you'll do it again. This teaches you to fall in love with the process and fall in love with you as the person who you're encouraging and grooming to be the best version of.